Welcome to our channel. Today, we're diving into a topic that's crucial for anyone interested in the world of investing: bear markets. Understanding what a bear market is and how to navigate it can make a significant difference in your financial journey. So, what exactly is a bear market? In simple terms, a bear market occurs when the prices of securities fall by 20% or more from their recent highs. This decline can happen over a prolonged period, often accompanied by widespread pessimism and negative investor sentiment. While bear markets can be unsettling, they are a natural part of the market cycle, and knowing how to survive one can empower you as an investor. First and foremost, it's essential to stay calm. Panic selling can lead to significant losses, and history shows that markets do recover over time. Instead of reacting impulsively, take a step back and assess your investment strategy. This is a great time to review your portfolio and ensure it aligns with your long-term goals. One effective strategy during a bear market is to focus on quality investments. Look for companies with strong fundamentals, solid balance sheets, and a history of resilience. These companies are more likely to weather the storm and emerge stronger when the market rebounds. Diversification is also key. Spreading your investments across various sectors can help mitigate risk. Another tip is to consider dollar cost averaging. This approach involves investing a fixed amount of money at regular intervals, regardless of market conditions. By doing this, you can take advantage of lower prices during a bear market, potentially increasing your returns when the market recovers. Education is your best ally during challenging times. Take this opportunity to learn more about market trends, economic indicators, and investment strategies. There are plenty of resources available, from online courses to financial news outlets, that can help you become a more informed investor. Lastly, remember that bear markets can also present unique opportunities. Some investors see this as a chance to buy undervalued stocks that have strong potential for growth. If you have the financial capacity and a long-term perspective, consider adding to your positions in quality companies that may be temporarily undervalued. As we wrap up, remember that bear markets are a part of the investing landscape. By staying informed, maintaining a calm demeanor, and focusing on quality investments, you can navigate these challenging times with confidence. Thank you for joining us today. If you found this information helpful, please consider subscribing to our channel for more insights and tips on navigating the world of investing. Stay positive and happy investing.